Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. Penny stocks, typically trading below 50 rupees, represent the smaller end of the equity market and often attract attention for their sharp price movements rather than fundamentals. Limited analysts' coverage and low liquidity add to their risk profile, keeping many investors cautious. Yet, beneath this volatility, a few companies have built credible businesses with improving earnings, strong governance, and market leadership. These firms may not make headlines, but their consistent execution and balance sheet strength set them apart. In this video, we discuss 5 such penny stocks with strong fundamentals. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on our list is Trident. Trident is one of the largest vertically integrated companies in the home textile industry in India. It's the flagship company of the diversified Trident Group. It operates as a vertically integrated manufacturer across 5 major business segments: yarn, home textiles including bath and bed linen, paper, chemicals and energy. The company is geographically diversified with 53% of its total revenue coming from exports in FY25. Its products are sold across over 100 countries with a bigger presence in the US, UK, Gulf and India. India accounted for 47% of revenue while the rest of the world accounted for 34%. The US accounted for 19% of the revenue in FY25, down from 39% in FY24 as higher import duties on textiles weighed on performance. Revenue declined 2.1% year-on-year to 17.1 billion rupees, primarily due to increased exports to non-US markets. However, profit after tax increased 89% to 1.4 billion rupees due to lower expenses and improved margins. Looking ahead, Trident is making a strategic shift from volume growth to margin-based growth. Trident is also diversifying into non-US markets such as Europe, the Middle East and Australia. Trident is well positioned to benefit from the India-UK FTA as it's the second largest exporter of home textiles from India to the UK. The company is also monitoring the potential near-future India-EU FTA. Strategic expansion is planned for fashion bedding, digital printing and technical textiles. It aims to capitalize on the improvement in educational printing in India by providing globally recognized wheat straw-based paper. Second on the list is Yes Bank. Yes Bank is the 6th largest private sector bank in terms of total assets. The bank offers a wide array of products and services catering to retail, MSME and corporate clients across India. It holds the number 1 rank as the UPI Pay payment service provider with a 56.9% market share. It is also the number 1 acquiring Aadhaar-enabled payment scheme bank with 39.21% market share. As of Q2 of FY26, the bank's total assets stood at 4.2 trillion rupees, up 2.6% year-on-year. Advances grew 6.4% to 2.5 trillion rupees, while deposits increased 6.9% to 2.9 trillion rupees. The current account savings account ratio stood at 33.7% versus 32% in the same quarter last year. The credit deposit ratio stood at 84.5%, lower than 84.8% in Q2 of FY25. In advances, the retail sector accounted for 48%, followed by corporate and institutional banking 27% and the commercial 25%. Net interest income surged 4.6% to 23 billion rupees as net interest margin expanded by 10 basis points to 2.5%. PAT increased by 18.3% to 6.5 billion rupees and operating profit rose by 32.9% to 12.9 billion rupees. Its asset quality was strong too. Gross non-performing assets stood at 1.6%, while net non-performing asset declined to 0.3%. The bank had a return on assets of 0.6%. Sumitomo Mitsui Banking Corporation has become the bank's largest shareholder with a 24.2% stake. This transaction was the largest cross-border investment in an Indian private sector bank. The bank aims to achieve a full-year return on assets of 1% by FY27. NIM expansion, lower credit costs and efficiency gains will drive this expansion. The NIM expansion in particular is expected to be a key earnings driver, with management anticipating support from the repricing of term deposits, a further decline in rural infrastructure development fund balances, and potential benefits from any future cash reserve ratio cuts. The bank projects loan growth of 12 to 15% for FY26. It expects growth trajectory in the retail segment driven by high-yielding products like digital overdraft for SME customers. Next on the list is Fineotex Chemicals. Fineotex Chemical is a specialty chemical company. It ranks among the leading producers of tailor-made specialty performance chemicals. While originally focused on textile chemicals, Fineotex has now diversified its portfolio into high-growth verticals including cleaning and hygiene, oil and gas, water treatment and performance chemicals. It exports to 69 countries and operates with a diversified product portfolio of 470 plus product categories. The company has a total manufacturing capacity of 120,000 metric tons per annum. From a financial perspective, revenue declined by 3.5% year-on-year to 1.4 billion rupees, driven mainly by volume growth. PAT fell by 13.5% to 250 million rupees as margins declined. Fineotex is strategically shifting its focus to high-growth adjacent sectors including oil and gas and water treatment, FMCG and cleaning and hygiene. Opportunities in oil, gas and water treatment are driven by the rising industrialization, urbanization, water scarcity, desalination and the expansion of refineries and natural gas pipelines. The company has added 15,000 metric tons per annum of capacity to meet rising domestic and international demand. Fourth on our list is Infibeam Avenues. Infibeam Avenues is a global fintech company and India's first listed fintech entity. It offers full-stack B2B digital payment solution, enterprise e-commerce software platforms, and lending solutions. The company has two verticals, Infibeam Focus and Rediff Focus. Infibeam focuses primarily on CC Avenue payments and AI infrastructure. CC Avenue is one of India's most trusted payment gateway, known for deep integration and regulatory credibility. Rediff's Focus vertical aims to tap into growing e-commerce enterprise, software as a service and productivity solutions market. Company's revenue rose 72% year-on-year to 12.8 billion rupees in Q1 of FY26, driven by consumer engagement and market penetration. PAT fell 16% to 580 million rupees as margins declined. Looking ahead, the e-commerce platform infrastructure business was transferred to Rediff.com for 8 billion rupees. It expects Rediff to achieve a revenue run rate of around 3 billion rupees and surpass 10 billion rupees in annualized revenue within 12 months of the acquisition's completion. Rediff 1 was scheduled to launch in Q2 of FY26 and Rediff Pay is expected to launch in Q4 of FY26. Infibeam is also setting up a roadmap for 12 small city AI-driven data centers under the name Infibeam Quantum Edge. The company employs a customer-centric deployment strategy to ensure high utilization rates. It plans to achieve its return on investment target within 18 to 36 months. International operations are expected to contribute 12 to 15% of payout net revenue by FY28. The Middle East is a core market, and operations are also expected to commence in the US and Australia in FY27. Fifth on our list is IRB Infrastructure. IRB Infrastructure is one of India's largest private road and highway integrated infrastructure developer companies, managing highway assets worth over 800 billion rupees. The company maintains a large portfolio of road assets spanning build, operate, transfer, toll, operate, transfer and hybrid annuity model projects. IRB owns and manages approximately 15,444 lane kilometer of roads across 12 states in India and holds about 10% market share of pan-India toll revenue. The weighted average residual concession life for its assets is about 21 years. From a financial standpoint, total income rose 10% to 21.6 billion rupees, driven mainly by the InvITs segment, which grew by 191%. The BOT and the construction segment remained subdued due to a decrease in construction and project awards. The net profit rose 45% to 2 billion rupees. Looking ahead, the company aims to expand its asset base to 1.4 trillion rupees over the next 3 years. This outlook is centered on the ongoing implementation of its bid, execute, stabilize and transfer strategy to unlock and reinvest capital for new high potential projects. In line with this strategy, IRB initiated the transfer of 3 mature BOT assets from the private InvIT to the public InvIT. The transaction is expected to release Rupees 49 billion, providing IRB the financial lever to bid for projects worth 150 billion rupees. The total order book stood at 305 billion rupees with 50 billion rupees of executable pipeline for the next 2 years. There is growth on the monetization front as well. NHAI plans to monetize 24 highway bundles totaling 1,472 kilometers in FY26. This segment could drive growth as TOT concessions provide access to toll collection and a long-term revenue pipeline. There is also an 871 kilometer project pipeline earmarked for bidding. Now the question is, should you consider fundamentally strong penny stocks? While penny stocks are often associated with volatility and speculation, a closer look reveals a few companies that combine scale, execution capability and financial discipline. Some companies stand out for their operational matrix, diversified revenue streams and profitability. Investors tracking this segment should focus on consistent earnings, balance sheet strength and management quality to separate fundamentally strong penny stocks from the speculative ones. Instead of relying only on hype, it is necessary to carefully analyze the company's fundamentals, including financial performance, corporate governance practices and growth prospects. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.